Okay, great. So basically, if we look overnight, let's start with the overnight charts and go from there because we basically traded sideways the majority of the night, which was good actually. It let us know that the consolidation held, and a lot of times overnight it'll be easier to push down, and they were unable to do so. They tried to do so right here in Europe, you can see, and they had no success there. So that could tell us that there's still a few shorts in, and or we're in the normal Christmas rally mode. So obviously, the first thing that I see is if we're going to have downside today or sustained downside, first we have to get below these lows. And really, these are the same lows that were held in yesterday's consolidation mode. So really that 78 area becomes pretty important on the first test down. I would expect responsive buyers there the first time through. If it blows through this area without a rotation, that would be an indication that we are having weakness, and I would look for a counter rotation actually to get short. But that's only if we just fly through this zone, right? On the upside, obviously we're still pushing. Yesterday's highs are going to be important up here. And also this one little level right there will be important. But I got to say, I don't want to trade in this area. You can't see, guys, right? I apologize. Okay, so let me annotate. This area right here, I think is going to be pretty minor. And the reason for that is this was Chop City. All of this area between really 80 and 82 was an awful place to trade. It was an awful place to trade yesterday, and it was an awful place to trade last night as well. The reason for that was we're blowing through it again, right? And so you had no security whether we were going to pass through the downside or pass through the upside. So this is an area I don't want to look to place a trade in. On the upside scenario, right? Clearly, to get an extension up, we're going to have to clear yesterday's highs, and we had pretty good rejection at 1785, and I would look for the possibilities of responsive buyers. Now, this depends. We're still a good 45 minutes away from the open, right? If we open here, I'm not going to be very eager to short this area. Again, let's go over the fundamentals of what makes a good trade, right? First of all, a solid, large trade rotation. Secondly, we want to make sure that we are not in the middle of a ripping open drive up or down, right? And then the third that helps us is tick divergence, though it's not necessarily necessary. And then the fourth, and what is important, is the focus on the first time into the zone. Yesterday was an excellent example, and also Friday for that matter, where we get a balanced day, and you can trade the same zones multiple times over and over and over again, and tick divergence actually does give you some guidance there. I just wasn't certain that we would have a balanced day after the gap. I obviously went over it in the pre-market as a possibility. And then also, if you're certain of it in your trade plan, then that's fine. Go ahead and trade the zones, a second or third time. Just realize each time that zone gets hit, it gets weaker and weaker. Also, if a zone gets blown through, let's say this is a zone, and it just gets, from upside, just gets shredded like this, right? If we come back around on the other side, there's high odds, even if we have a small rejection here, that we're just going to trade right back up through there, which is why I usually skip. So you have to remember how I'm thinking about the market when I approach the market. I'm approaching the market from a very leveraged, large trade position perspective, right? And so when you're just starting off your trading account, and I assume the majority of the people talking to me have either been growing with me or just starting off their trading account. If you're just starting off your trading account, you think, well, how much money can it be? And even if I'm wrong, I can make it up. But institutional traders don't think that way. Institutional traders think, I want my highest odds trade, I want to nail my trade location, and I want to build my account. And that's how you make that quantum leap from trading, $10, $20, $30,000, $50,000, $100,000 to getting up to trading $1 million size accounts. And it can be done, but it has to be done methodically, right? And that means you have to have both your mental game together, your discipline game together, and a solid trade plan, actionable edge. Okay, so let's go over the the volume profiles real quick and take a look at what they look like. Actually, I have them right here. Okay, so let's just wait. The first thing I want to do is look at the daily on the ES. And so what I want to see is, what do markets look like when we have gaps like this, off and down trends, and what are the options, right? Well, one good example of that we have right here, where we opened up. In this particular case, we closed near the high. It's interesting that we weren't able to manage a close anywhere close to the high yesterday, and actually told us that people aren't over exuberant about pushing it higher. That doesn't mean that they can't push it higher. It's just one clue and something to keep in mind. Also, if you look at NQ, NQ is still trailing ES. It was definitely the weaker sister of the two yesterday. If we go a little further back in the volume profile, and I want to go back to the example we had. Okay, here's one example, and this example was at the high, right? Then we continued. We opened near the lows, and we continue to have these open drives higher, right? But we actually had a slight gap down. This is just the opposite case, right? It looks like we're going to be opening near the highs, and if you'll look, each of these days where we drove up for the most part and closed at the highs, we actually had gap downs the following day. We're having just the opposite effect, even though it's small at this point, is that we're actually having a gap up. So that's something else to keep in mind. It actually would probably be a little bit healthier for us if we could have managed to gap down. We're not having it, no deal. And then the last one I wanted to show you is when we gapped up and went into balance. And that was right about, I want to say, actually, we'll use this again. This is a good example where we actually opened in, right, in balance. But again, the following day we had a gap down here. Okay, and then we rotated higher. On this balance day, we actually opened, tested back into the range below, and then pushed higher the following day. The reason why I go over these examples is I want to get a good idea of what the possibilities are for the day as the day is developing, because eventually, if you look enough at these profiles and you see how they develop in and out of prior balance areas of balance, the low value areas and the high value areas, you can get an idea of anticipation of what's going to go on. So my guess is, at this point, is that people are kind of setting up for the year-end rally, and that what will actually look like, if I can get to the beginning of this chart here, let's see if I can just pull it in and pull in. Computer is not operating this morning. It's like dragging teeth. Yeah. So my guess is, looking at the way we closed yesterday, right? This 1788, 1790 area is going to be important, right? Followed by this 96 area right up in here, where this is where last time, if you recall, when we broke down, when we had the original breakdown, right? We got back above, okay, and you'll notice that we rejected right out of this area multiple times, right? Not only in the 94 area, but again, when we got down, when we were above 1800, each time we were above 1800, we kept finding support right in this area and rejecting back up, right? Same thing here. So I would suspect that when we come back up, this 1794 area, 96 area, will find resistance, and that 9092, when we finally broke down, was a very critical area, and I suspect when we come back up to it, we will find responsive sellers. Also, that'll put us right up into initial support, right? On the downside, if we retrace this move, right, and we come in for a gap fill is all the way down here, okay? The overnight lows were at 1754 on the Globex, which puts us down right about here. It would make sense that we find responsive buyers at gap fill the first time, and actually maybe even before, because this, on this move, this area right here will put us about halfway back on the day session, and the gap fill actually just above this right in here, right about here, puts us halfway back from here to here, which was the overnight Globex low. So I look for responsive buyers the first time in, and really probably just below the prior highs here if we get a downside move. So let's go over real quick and take a look at the 24-hour and see where the support levels are there. And again, I merge both of them when I'm trading. I try to do a fusion of both charts, right? I'm doing it on time, 5 minutes. Let's look at 24-hour ES. So today on ES, excuse me, I don't do that. Let's just do this. Today on ES, this is the hump right here, this area. This is the make or break. So we could simply be gapping right into resistance and roll back over, and then this 1770 area would be the first place possibly to find larger resistance where we could expect larger buy rotation back up, right? Below that, right down here. But you got to remember, the key or the important things off these 24-hour volume profiles are not the smaller high volume areas, but the high volume area for me. So below here, there's not a lot that I would lean on outside of extensions, right? But expecting major rotation down, we're simply going to have to get stretched, because these were just all of this on 24-hour was incredibly poorly auctioned, right? So there's not a lot holding it. I would lean in this area right here the first time in, just because of prior support. It was a prior support area, right? And so there's two options. This could have all been a short squeeze or the beginning of the Santa Claus rally. And really, we'll find out, right? If we can get above this area here and trade above and then come back in for a test and hold, there's a good chance we can squeeze them back all the way into that 96, 98 area at first. And then we'll see what happens. Obviously, as the week goes on and we get closer to Christmas, Wall Street's going to get thinner and thinner, and pushing the market around will become much, much easier. What I would suggest is you go back and look at the last 3 years of Christmas to see how those days have played out. It'll give you a good idea of how you want to manage your trade days. So let's look a quick look at NQ here and see what it looks like. Okay, NQ hasn't done anything. We're in and that's interesting because it does seem like it's lagging. But the other option is NQ is simply in a larger balance, right? So let me get rid of this. So if we look, right, this is the top-ish area, and then this was the breakout area that we failed back below, right? So 3,500 becomes key. Also 3,490 to 3,480 has repeatedly been a good area to look both to get short and long. There's been responsive buyers and sellers in that area both times. You'll see we closed back below that area yesterday, even though they short squeezed it above, right? Failure to get above. So this morning, Globex highs at 34.74, which puts us again right into the area we rejected out of yesterday. I will be watching NQ, but keep in mind, we've been looking for NQ for leadership for the past really months. And for the last, I think, 4 or 5 trading days, NQ has been weak to the downside and actually had the effect of pulling the market back to the downside as well. So we need to see on the support-wise on NQ, if we look at the 24-hour, outside of holding the bottom of this range, obviously 3450 is important and 3500 is important, right? But if we get, hold on one second. Right, if we look at the, oh, that's not the right one. Excuse me. There we go. Okay, and we'll see we're in the exact same situation as we were yesterday, right? We have to get above this area. today. This is both support and resistance, and we're opening right in the middle. So what that means when we look at a 24-hour chart, right, is that we can either break this way, but on the retest we have to hold and go higher, or we break lower. This now becomes resistance area, right, and then we come back for a test and trade lower. So that's what I'll be looking for on NQ. It's really frustrating when we open right in the major area, the major hump that we have to get over to have support or resistance, but you'll see we do have a slight bit of sell pressure now coming in after we've hit that 8250 area, which is what it exactly what it should do. So let's go look at the scenarios real quick here, and let's take a quick look. Basically, overnight, there is no trend. We bounce sideways, and we have a slight breakout. Guys, y'all should know enough where y'all can pull up the trend lines. I would look at them. And then let me go back over to the trade plan real quick. So we're open in this 1782 area. As a matter of fact, 1782.50 is the back, so you can keep the Globex high right here, right? This is the white zone for today, and there's two white zones, okay? This initial support down here is very important. From the move from the lows on the day session to yesterday's high, right? This would be a pretty good retrace back, and I would expect responsive buyers here. And this would actually be, I would try to stick a swing long out of this area if we get back in, right? As far as important areas to hold, if we don't open in the white zone critically, right? And right now it looks like we are. If we don't open in the white zone, the first test of the white zone, even if it's a small rotation, right, is quite often a profitable trade. If y'all have been with me for a long time, you know that that's a high odds trade. When we were having open drives in one direction or another, that proved not to be true. So if we open in the white zone, what I would look to do is look for rejection actually the second time in. For super aggressive traders, you can trade that first move in, even if it's a small rotation. The risk in making that decision is, can you withstand the loss that's required to take the trade there, right? Outside of that, if we're opening at the 1780 area, which is right here, these are the areas that I'm looking to take responsive trades, right? So from 1780, if I look and I get a nice rotation, the back of this 1785, 86 area, again, this is small because this entire area was a chop area, right? So I'm trying to get very specific with my entries. That's my first trade location I'd be looking at for a stretch, right, to the downside. Above there, obviously, a 10-point rotation up from 1780, and again, this would be right at gap fill as well, right? And where I would try to get a larger trade to the downside, and I would try to leave trailers, is right here. And then the same thing to the downside, right? If we open it again, the 1781 area, and I'm looking for a 6-point rotation lower, right? So that's going to put me right down here, here, and here. And again, I'm trying to stick a trailer out of these areas right here. So I don't suspect we're going to have another large move like we had yesterday. Pre-holiday markets get pretty boring. When I was looking at the calendar this morning, we have a housing number coming out at 9 a.m. and we've already had the 7:30 data, and it looks like we are just bouncing around here now that we're at 8:04. So that's all I got. Again, my focus is going to be up here and down here, and only super aggressive traders should be trading right around the white zone, since that's exactly where we're opening. You still want a good stretch. Keep in mind, the focus is 1 or 2 trades a day, right? And then we're building over time. We're building the number of contracts that we're trading. It's better to make profit on 1 or 2 trades in a day, do that over multiple days, then add a contract. Your P&L will grow exponentially. I've done this with numerous guys at this point, and the results have been the same across the board. Anyone can do this. It doesn't have to be a mystery. I've had a couple complaints that my trade presentations are a little too simple with the rotation size. Simple works, guys. Okay, if you can come up with ways to nail these zones on your own, right? Simple works, and then simply identifying what type of day we're going to have. And so we know that if we blow through yesterday's lows, right, without any pause, there's concern. The other trades that are there, by the way, right, if we blow through into these areas, right, and then we close back above Globex low, right, that would put us, that would set up a potential trap trade, which would move us to the other end of the range, which at this point would be 1782.50, right? By the same virtue, if we get up into Monday's highs, right, and we reject, and then we get back below Globex highs, that would set up a potential trap trade there. If we get above Monday's highs and close back below Monday's highs, again, another potential trap trade. Trap trades tend, if they hold, right, to trade to the other end of the range. Okay, so these become very nice trade setups. And they also give you a clue if you're leaving these trailers. Once we get above Globex lows, or if you leave trailers from initial resistance, right, and we get below Monday's high again, you want to leave a trailer and see if we can push all the way down to the other end of the range, or vice versa. That helps with your trade management as well. So the only last note is if we really sell, we have gap fill down here at 1769. I would expect responsive buyers there, and I would expect responsive sellers at 96.98 if we get a strong bull move up, right? That's where we're finding consistent support when we were trading above, actually, excuse me, that 1800. This is going to be the area where we're finding consistent support. I misspoke. This is going to be the equivalent of being back above that 1801, 1802, and should also provide, because of the stretch, significant resistance. I forgot that we shifted down 6.5 points when we changed contracts. So that's what I have. Guys, have a great day. I'll be back shortly after the open, and I will post the trade review at that point. We'll talk to you later. Bye-bye.